All right, so I'm just going to move on to the second thing you're asked to do in these questions, which is prepare a cash flow statement for the period. Okay, cash flow statements have a load of headings to them. There's quite a kind of prescribed layout that they need. So there's a load of headings that at higher level you need to learn, but in ordinary level exam questions, they always give us the headings. So they don't do it here in the book, I think just to save a little bit of space, but your cash flow statement is going to roughly look like that. And in an exam question, if you look at the ordinary level exam questions, it says prepare a cash flow statement using the following headings: operating activities, returns on investment and servicing of finance, taxation, capital expenditure and financial investments, equity dividends paid, and financing. All right, so those 6 headings will be given to you in the exam. So just copy them out, and then it's just a matter of knowing what goes in each section. Okay, and obviously how to do it, but the headings you are given, okay, and you'll be given them in order like this, so you can just kind of copy them out like this. Maybe give yourself 2 lines after each one, just in case there's ever 2 things to go into any of the sections. All right, so layout's going to look like that. Headings that you will be given, so you'll see those in the solution in the book as well, but as I say, you'll be given them in an exam question, and just 2 spaces to put numbers in, so 2 columns over here. All right, the first thing then, the operating activities, that's just your answer from here that goes under that heading. So under operating activities, I'm going to put net cash flow from operating activities. And that is 458,400. All right, and that's going to go over here. We'll use this column for if there's ever 2 items under any heading, just add them up. Okay, but there's only 1 item under a heading, you can just straight over here. Next one then, so returns on investment and servicing of finance. All right, so that's going to be stuff like interest received or investment income received, or what we see I think in this question is interest paid is going to go in here. Okay, so you will look and see over here in the profit and loss extract I'm given, there is interest paid of 33,600. All right, now what I need to do is figure out how much interest was actually paid in cash this year. So if you remember going back to doing profit and loss accounts in sole trader and in company accounts, this 33,600, that's the interest for the entire year. That's how much they should pay for 2019. What they actually pay might be a little bit different. All right, so you need to look up here in the balance sheet and see, is there any interest due last year or is there any interest due this year? There's not. Okay, so that means I can just go ahead and put that interest number in, that 33,600. All right, so returns on investment and servicing of finance, what goes in there is interest paid. Because there's no mention of interest due at the start or end of the period, I can just slot that number straight in. So take away 33,600. Because you're paying the interest, it's an outflow of cash. So this is where you're trying to come up with the actual increase in cash during the year. So this, as I said, gets us closer to that number. The answer to this is going to be how much my cash actually increases last year versus this year. All right, so next one then is taxation is the next heading. So obviously it's taxation paid is what goes under that heading. There's a little bit more to this one because you'll see there's taxation there in the accounts of 67,200. So that's the taxation charge for this year. But there is taxation due, so taxation you owe at the end of last year and at the end of this year. Okay, so we need to think this one through a little bit. So what I would say is my starting point would be the 86,400 tax that we owed at the end of last year. I would assume we've paid that this year. Okay, so if I owe the revenue commissioners 86,400 at the end of last year, I better make sure to pay them that money this year, okay, or else they'll come looking for it. So that 86,400, which is a creditor, it's money that we owe, I'm going to assume that's paid. So that is an outflow of cash, okay? So my taxation paid is going to be that 86,400. All right, I'm going to assume that I pay that money. Now, in the accounts, there's another charge of 67,200. So the tax on this year's profits is 67,200. So I have to pay that as well. So I'm going to add that charge on. So I have 86,400 to pay from last year, and I have another 67,200 to pay this year. So quite a bit of tax to pay. But if you look at the balance sheet, you will see that at the end of this year, I still owe 67,200. So this charge for this year, I haven't actually paid it yet. So I'll take it away again. So assume you paid last year's, plus then I have to pay this year's, but I haven't paid this year's yet, so I take it away. All right. Do the full working like I'm doing there. All right. Because these numbers can be different. Okay. You might have paid some of this, and okay. So go through it the same way I've gone through it there. So last year's plus the charge from the income, from the profit and loss, take away what's owing at the end of this year. All right, and obviously that's going to be 86,400 when I calculate it on the calculator, and that's tax I'm paying, so that's going to be a negative number. Okay, so that's tax paid, so that's obviously an outflow of cash. All right, next one then is capital expenditure and financial investment. So the big one you're going to see here, so there's a list of everything that can come under these headings in the book there, but the big one you're going to see here is when you buy a fixed asset. Okay, so I mentioned that at the start of the previous video. When you buy a fixed asset, you don't put it in as an expense in the profit and loss. You put it on the balance sheet. But when you buy a fixed asset, you are spending money. Okay, there is an outflow of cash there. So I'm going to recognize that here. All right, so where I see in the accounts that I'm buying a fixed asset is here. If you look at the fixed assets up here, they were 1680,000 last year, and they are 2112,000 this year. So it looks like I bought around about $500,000 worth of fixed assets. So the cost last year, cost this year is different. It's increasing. So that must be my fixed assets that I am purchasing. All right. So purchase of fixed assets, or payments to acquire fixed assets, is kind of what you might see in the solutions, but just purchase of fixed assets. And that's going to be the 2112 here. Take away the 1680 here. And if you subtract those two numbers from each other on the calculator, you're going to get 432. That is a payment to buy a fixed asset. So that's an outflow of cash as well. You're spending money. So that's take away 432. All right. So that is 2112. All right. The next heading then is equity dividends paid. This is dividends paid. You'll see over here in the profit and loss, dividends for the year. Again, so for anything here, you should just be checking there's none owing at the end of last year. There's none owing at the end of this year. There shouldn't be for dividends. Dividends, generally, you should be just taking this number from the profit and loss and putting it straight into the cash flow. But just check that there's nothing over here on the balance sheet, like we had for tax. Like you definitely will see sometimes for interest. All right, you shouldn't see it for dividends usually. So it's just this 76,800 that I paid from the profit and loss. That's actual dividends paid. So I'm going to put that in. You're paying it, so it's an outflow of cash minus 76,800. So just taking that straight from the profit and loss. So you see these three numbers that I subtracted after the operating profit. I'm putting them in here into my cash flow statement. They just might be slightly different in the case of interest and tax. if there's amounts owing at the end and start of the year. So once you've done those first 5 headings, you're going to total those. So the operating activities I had, and then you're going to take these 4 numbers away and you're going to get minus 170,400. So it's a cash outflow. All right. And then the final heading then comes after that, and the final heading is financing. And you'll find your financing stuff down here in the bottom of the balance sheet, the financed by. Okay, so the 2 big ones you'll see is issuing new debentures. So the debentures were 360 last year, they're 432 this year. So you've issued another 72 grand's worth of debentures. You've got another 70 grand's worth of loans. So that is 70 grand coming into you. All right. And you'll also see your share capital was about 1.1 million last year, and it's about 1.2 million this year. So you've issued new shares, you've sold some of your shares. And again, when you sell shares, that's money in for you. You're getting that money. Okay. So it's financing is where we recognize those 2 things. Okay. The profit and loss, we don't do anything with that, because that's your operating profit is the difference between those. And we've already dealt with operating profit up here. Okay, so it's just the debentures and the share capitals that we put in down here. The debentures could go from a bigger number to a smaller number. You're basically repaying some of the loan. In that case, it would be an outflow of cash, but in this one, it's an inflow. So anyway, you're financing. 2 things I put in: receipts from issue of debentures, so that's your loan, and then receipts from issue of shares. So the debentures, it's 432 this year, it's 360 last year, so take those away from each other. So you had issued 360, you've now issued 432, so you've issued another 72 grand. Sorry, this should just go in this column here. I don't have too much space, but I'll just, if I squeeze it in here, that is 72,000. And that's you issuing new debentures, which is kind of like getting a new loan. So that is money coming in when you get the loan, okay, or when you sell the debentures to people. It's a slight difference to a loan. Receipts then from the issue of shares. So this year of about 1.2, last year about 1.1. So I have issued shares. Okay, so I've sold some of my shares, so that is also a cash inflow. So again, I'm just going to go this year's number, 1.2. Take away last year's number. And if you subtract those from each other, that is you issuing 120,000 euro worth of shares. So you've sold another 120,000 of your shares. Again, I'm a little bit tight for space there. I should have tried to make that a bit smaller. So I'm going to just add those, and they are an inflow of another 192,000 euro. Okay, so when you get new loans, you're getting money in. When you sell your shares, you're getting money in. All right, as I said, just watch out for the loan one. That could be repaying the loan sometimes, and that can be an outflow. The shares, I would say you will generally see that being positive and being an inflow of cash and selling shares, and more issued this year versus last year. So just going to add this total and my financing total, and I get 21,600. All right. The answer in your cash flow statement is called either an increase or decrease of cash. This one's positive, so it's an increase in cash. All right, of 21,600. All right, that's the cash flow statement done. There is a very small little bit we need to finish off. The third part is a lot quicker than the cash flow statement. That's very much the kind of longest part of the question. So I will finish it off in the next video.